Hi, welcome to Charts Chatter with Chatur Charts, 9th June 2022 Bull Edition. Well, this could really would have been called the Bull Edition because of the smart recovery that the market made towards the end of the day. And perhaps the writing on the wall was there in yesterday, that is 8th June 2022 video. I had kind of analyzed the charts and brought about the triple whammy observation. And in my experience of over the many years, I haven't seen a triple whammy fail. So I was steadfast on my decision to go long and had in fact rolled over the long position since yesterday. And thankfully, the market gods favored us. So we take a bow and pray before the market gods to keep continuing to bless our analysis. Well, having said that, it is important to just see as to what the charts are indicating today and what are the prospects for it going forward. So here is the Nifty chart, and this is the day chart, and you'll see a beautiful green candle, a enlarging candle, completely covering the bearish candle, the bearish engulfing candle, and so that's a very good sign. Importantly, on the day charts, the 20 MA support has been taken at around 16,290. Even day before yesterday's close was above that level at 16,356. And today's close is well above the today's low, in fact, is at 16,263. So again, the 20 MA has come in as a handy support. Many a times, the 20 MA is the last port of call. So many a times, when the 20 MA is broken, then the market decisively moves down. So I was watching the 20 MA movement very closely over the last few days, just to make sure that it is not breached. And that was one of the other reasons why I felt perhaps that the market might take support and move along. Now, if we go to the hourly chart, and in fact, this is where we had noticed the reverse bullish divergence yesterday. So if you look at the hourly chart, it has made a beautiful inverted head and shoulder pattern. Nifty has made a very beautiful pattern. And it is exactly standing at the breakout point. Now, here, a lot of things can happen. This can be treated as multiple tops and it might tend to correct, or it might break out and move up. So it will be very interesting to see as to what happens going forward. So on the hourly charts, the other observation that I see is that this is a falling channel on the hourly chart. And today it has given a very healthy breakout out of the falling channel. So which means that if it sustains, then there are new highs to be made in Nifty. So it is at a juncture where it can move decisively in any direction. If it were to correct, perhaps this support of 16,400, 16,375 to 400 may become one more support. Nifty might spend some time here and again move up. So it will be very interesting to see as to what happens. It can move up equally well, and it can also breach this support and again retest lower levels because of a lot of global cues, which we will discuss a little bit later today. Now let's see what Bank Nifty did today. Bank Nifty was the laggard for most part of the day until it broke out well after the 1:30 p.m. candle. So in its journey, Bank Nifty has also made a very bullish candle. Not as strong as the Nifty one, but equally good because this is for the most part can be considered as a bullish engulfing candle. On the daily chart, again, similar to Nifty, Bank Nifty has also taken support at 20 MA at 35,700 zones. Even yesterday, it tested that level, closed above it, and today again it has tested that same level and it has closed comfortably at 35,085. Had it crossed 35,150, perhaps the 80 MA on the day chart may have been also kind of captured. Nevertheless, it's a good close. Let's look at the hourly charts and see what Bank Nifty kind of shows up. On the hourly chart, Bank Nifty also is a beautiful inverted head and shoulder. And this is exactly the place where we had also seen the bullish reverse divergence yesterday. So it played out to our satisfaction today. But again, and it's a breakout out of the falling channel, identical to Nifty, even Bank Nifty, there's a breakout of the falling channel. So again, it's a very, very crucial close, and global factors will really determine how these indices will move ahead. Like our Reserve Bank hiked rates yesterday, the European Central Bank also met up today, and they have also decided to hike rates next week in the first week of July, and thereafter again in September. So that comes as a very firm decision. The Fed is also likely to meet in July first week for another rate hike. So world over, rate hikes are keeping markets at on the edge, and how markets will kind of balance off between the rate hike and growth, and kind of trying to work on keeping the inflation low. These are all factors which will determine how equity markets will perform. Crude oil is also putting pressure to keep the markets under great deal of stress. So how markets will unfold, unravel, and how investors will decide as to what asset class to continue investing in will be very, very decisive in the next few weeks. So until then, let's enjoy the moment. Let's enjoy the beautiful triple whammy recovery today, and let's see what's in store for there tomorrow. Until then, have a nice evening. Bye bye.